Good morning, everybody. Good morning, everybody. How's everyone doing today? What's going on? Good morning, good morning. If you're just joining us, say what's up in the chat. It's good to hear from all of you. Wish you guys had a great weekend. Getting back on the charts for a new month of May. I'm going to do a top-down analysis today. And we'll get started pretty soon. All right. Good morning, Hakeem. Good morning, Think G. Shout out to you guys. Appreciate you guys being here. The real one, shout out to you. Appreciate you being here as well. All right, we'll get started. So, again, if you guys have been watching any of my previous streams, last month we were really focused on this sell-side liquidity pool right here. We're watching all of these new week opening gaps and how those got closed through. After that happened, we noticed that this right here was a higher high. The liquidity that was being rated here on the daily. We watched that rejection block. We traded through that as well. And then the only other premium arrays was this buy-side liquidity pool. So right there, that was kind of just walking through this whole consolidation. And after we kind of broke out from this consolidation right here, you can see that the weekly range expansions have just been to the upside, which means that the weekly open is pretty influential. You can see that there's a very small wick on all of these weekly candles, right? So this is just all one directional expansion moves. During that time, you got to be very cautious in assuming any short positions, as they're very likely going to be short-lived, and you're not really just following higher time frame order flow if you're going short against these type of weekly candles, right? Another big part of my analysis is coupling the weekly open with the 30-second opening range, and you can kind of go ahead and see that and back test that as well. But when they're both in agreement, you want to just focus on the side that is basically showcasing the directional move. And if you did that, then these past weeks have been a little bit easier in terms of the directional bias. I'm sure that you guys have seen there's been a couple stop runs and such, but that's just the normal business of trading, right? So long story short, we are still bullish. There's not really anything on the weekly chart that's showcasing to me that we want to turn around yet. I mean, I can definitely go into the daily, and you can see here that almost every single imbalance that we've created here, bullish imbalance, bullish imbalance. We have another one that got created here, right? Bodies respected that. So there's nothing really here. I mean, we closed through a little bit of this, but again, there's a volume balance here. So if you really wanted to get accurate with it, then you can see that this is that 50% there. So nothing on the daily chart that's showcasing to me that they're changing order flow just yet. Obviously, you're going to stay nimble and aware that anything could basically transpire on this week, as well as looking at the economic calendar. This Friday, obviously first week of the month, you want to see if there's any kind of like Judas swing for the monthly candle, which is what you see right here on the right. So this is the daily monthly model, right? So this is a very large directional monthly candle, and this is kind of that new monthly candle right here. Good morning, Satish. So yeah, just looking at the daily, you can see again there's not really any kind of reason to look at shorts just yet. How we close the current day, let me zoom in. How we close this current day, it's going to be pretty influential to me as well. If we're going to really start to accelerate in this month, then really want to see more imbalances get created over previous daily highs. That's a really easy sign to tell if order flow is still continuing or not. We do have this fair value gap here. Obviously, we do have a volume balance here, but given the fact that we're already pressed up into you know, this expansion leg, I'd really like it just to respect the traditional imbalances. If again it trades through this, then I'm going to say, okay, how are we going to look to interact with the 50% of this, which is basically the 25% of this wick. And if there's any kind of meaningful nature of price action below, let's call it 27,400, then I'll start to be cautious, and we can either enter a consolidation or a retracement at these levels. But again, I'm not seeing anything on my charts right now that's telling me to look for shorts. So still going to maintain a bullish bias. Let's drop into the 4-hour. And this line again is just the previous daily high, right? So you can see again, we have this right here, which is that new day opening gap, and basically come down to fill sell side and then buy side. So to me, this is basically a balanced price range now. So how we interact with this right here, it's going to be pretty influential. We've already kind of traded underneath this imbalance right here on the 4-hour. So you'll be able to see that on the lower time frames. But again, there's not no bullish imbalances are getting closed through. I mean, we were mentioning this last week on our streams that basically once this closed through, then I was going to look to seek, you know, some sort of sell side liquidity, and then this new day opening gap. They basically just came just short of this. So still monitoring this. I believe that this is now seen as like a breakaway gap. So when we do trade at or near this level, I don't anticipate to bounce from here. I am anticipating it to sell off a little bit more if we even start getting there. So just treating that as a breakaway gap right now. Looking for the profile of the day. Again, basically had a high in Asia, and then London fails to take out the Asia high, and we're just traded down into this imbalance. So I'm gonna get rid of this just for time being. Start trading below the CE of this gap again, then I'll be looking at influential price action at this new day opening gap. So let's take a look on the hourly. You can clearly see here, again, there's the imbalance, 50% of it. Let's drop it to a 15-minute. And look at those candle bodies, like pretty well above that CE. Really, really nice signature. If you were to look at that 15-minute imbalance as well, they also respected that 50% pretty nicely. So even though this might have scared someone or caught them off guard, when you're at all-time highs, the type of sharp declines end up, you know, happening. They're a clear signature of price. They're basically just sweeping out sell-side liquidity pools and then looking to create new imbalances, as you see right here, to then set new highs. So that's kind of what we got for the business on the higher time frame. I'm going to go ahead and do a liquidity analysis of what the overnight did. So you have Asia high right here. Asia high gets ran out. So when I said on the 4-hour that they left Asia, that was basically incorrect. I was just looking at the 4-hour candle, but they rated it early Asia. So just as a clarification. So there is a Asia high run out. You can see that we responded to the midpoint here, and then new coupled imbalances right here to send us into Asia lows, and then filling also more of this new week opening gap right here. So I'm gonna go ahead and mark this out as well. And you can see the reactions to this. So they responded to the discount end coupled with an imbalance. I really like that. And then they also responded to the premium end of it and failed to basically set any kind of new higher highs. I think they just fell short of this right here. Yeah, they just fell short. So right now we're just inside of this new week opening gap. If we do open up in the next 10 minutes inside of this, then I'm just going to be cautious, as these are kind of going to be my markers, right? I want to see newly created imbalances away from the new week opening gap. Otherwise, there's a fairly decent chance that we can just consolidate within this range. when you start responding to the discount end and the premium end and kind of just going back and forth in here, you really want to see a meaningful imbalance away from the new week opening gap, because that just means that they're basically looking at working in the weekly open, and that's something that I want to see, like, quote unquote settle before I even jump into the charts. Of course, you can take scalps that are inside of this range, but you got to just be very nimble, and especially on a Monday, you want to be able to be very selective of the trades that you take, because your psychology on Monday is pretty important, I would argue. And this is also not correct, because this is the open right here, and this is the close. So there's that new week opening gap refined. But again, we're still inside of this range, and until we leave this range, I'm in a scalper's mentality. So that is the business there. I'm going to go ahead and add my liquidity layout to all of these as well. And let's go to the 15-minute chart. So still have Asia high on the Dow. Still have Asia high also on Russell. And yeah, so these two assets still have Asia high, and they're trading below the London low and Asia low. So if there's any kind of volatility at the open, then I'm going to look to say that these are going to be really clean relative equal highs on the Dow. Here as well, on the Russell, I do believe that they end up trading above these two liquidity pools. They're very close proximity liquidity pools, and given the volatility of the open, if there's any kind of meaningful price action above 28.18 on the Russell, these are going to be a pretty easy target. Same thing here on Dow. If they have any kind of degree of volatility that's above the 560s, and basically trade over this, initial dump, then I believe that these liquidity pools again will be pretty easy to target. Looking at ES, we fell pretty short to this New York PM, so this is just engineering relative equal lows to me. We obviously do have relative equal highs as well, but I'm less confident in the draw right now on ES. It's pretty actually incredible to see ES at 7,200. Say at least if you guys have been trading for any type of time, it's just been on a ripper, honestly. Like, I remember when we were in the 4,000s. I remember when we were in the 27s. So this has just been pretty incredible to see. Very resilient market, to say the least. But yeah, anyways, I'm less confident in the draw on ES and on NQ until we leave this new week opening gap. Not touching it. We have a great deal of space between the next two liquidity pools, so I'm more interested in, let's put my demonstration on. I'm more interested in these liquidity pools right here. But again, if we just get a straight dump down, like, I'm not going to be looking at that as much. So it's just conducive on the opening magnitude of the 930 open. So if we start opening up aggressively, then again, I do think that these are going to be pretty easy targets. Same thing for the Russell. You can see the space difference here to the London and to the New York PM liquidity pools on ES, and then also the same thing here. Like, there's a great deal of space here, and given the fact that we've already rated Asia high, I would just want the market to actually showcase to me that it really wants to target one end of the liquidity pool or not. So one thing I will mention too is on the daily chart of YM. I was looking at this imbalance last week, and this is that daily fair value gap. We did run out this high, and we never had a closure, but I am looking at this to say that this is another fair value gap. Ideally, if we're going to be bullish, we're going to stay above this. This could be, a little bit of a mohawk, just a wick outside of a predetermined range that you want to see respond to. And to me, again, if we invert this, then that'd be pretty nice to target out any of the pending liquidity pools and still maintain a bullish bias. So that's what I got. Before we head into the session, I will also So we got 4 minutes. I am liking this time. I started the stream a little bit later today. Just gives us more fluidity in the session. Just kind of do the AM analysis, and not have too much like pause time. We're gonna go into crude oil and gold, and then at that point we should be all good before 9:30. So let's take a look at this. So this has just been the same markup that I've seen on my charts for almost a month and a half now. We had this daily fair value gap. This is a 4-hour rejection block. These purples are new week opening gaps. And then this was that daily inversion. We had that daily inversion here. We said that we're going to trade up into this high. That ended up materializing and then also rebalancing this bearish fair value gap. And that was a perfect rebalance right there. We'll go into a lower time frame charts. I want to see if there's an hourly fair value gap. And that's what that fractal fair value gap is right there. So let's just showcase to you guys that. So that's absolutely perfect. I'd love to see that. It's a really, really strong price signature that once you trade into a daily fair value gap, if you have an hourly fair value gap after rebalancing, that's that fractal delivery that we talk about a lot. So that's a beautiful short right here on Thursday to target out sell side right here. So just something to be mindful of when you see those imbalances. You know, when I was first trading ICT very long time ago, I would look at this imbalance and say, okay, it's just going to go lower, but that's not something that I'd subscribe to anymore. It's just basically watching the imbalances and then watching very key levels of the imbalance. So basically either the discount end, which is going to be when the market is the most aggressive and the most bearish, it'll just trade up into this and then produce another imbalance. But again, if you're just in a ranging market, then it's going to want to rebalance this whole thing and, you know, let the rebalance take place and then really see a nice fair value gap that's created after the rebalancing. And that's what you get here. That's that fractal delivery. So right now we are basically still in a very large trading range. So this is basically the overall range. I'm just going to draw it visually so you guys can see it, but we're in a very large consolidation. Unless again there's crazy news that, you know, says that the war is stopping, which is in my opinion unlikely. There's still going to be new highs in this market. So I don't like selling short crude oil unless we really start breaking back below this fair value gap and then having any great degree of you know, price action below the 90s, which I think above 100 right now is just going to be a magnet for price. So let's go over to gold quickly. If you guys have any questions, then obviously toss them in the chat. But gold, we were looking at this again. This is that weekly imbalance. This is that daily fair value gap. We went from daily fair value gap to weekly fair value gap, rebalanced to the equilibrium, just basically consolidated here, ran out daily highs, had a nice inversion right here. That's not marked out right now, but I can mark that out. After we inverted that, we basically had sell side here and then sell side here. So that's kind of fulfilled its move. This is also now an inversion. So until we start going back above 46.89 with a daily close, I'll be temporarily bearish. And right now, this new week, this is a new week opening gap right here. This is still a target for me on the downside. This is also pretty nice to see. Nice little daily imbalance there. So, all right, let's get into the equities open. And let's see what they got for us. All right, 30-second opening range. So not getting that upside magnitude that I would want to see on Dow, so I'm just going to wait specifically on there. Same thing as well as the Russell. No upside magnitude as of right now. And until we leave this new week opening gap on the NASDAQ, I'm kind of just sitting on my hands. Well, I'm always open to see opportunities, Satish. So I never really just tell myself that any day is really no trading day. It's all about managing your expectations, right? So if you lower your expectations in anything in price action, then that typically is going to end up being more beneficial to you than not. just saying automatically that it's a no trade day. I think that is not the best for your psychology. I'll say it like that. Because then if you see a very nice move that you've seen before or studied, or it's in your model, then you're just going to be more hesitant just to basically say that you wouldn't take that just because of a preconceived notion that you put into your head. So just let price tell you what it wants to do and just lower expectations. It's the same thing, like you can have a predetermined bias going into the session, but it's really important to stay fluid, because if you fight what price is telling you versus to what your bias is on the day, then that ends up just having conflict, and that's something you want to avoid in your trading. You want to be very fluid with price. So yeah, we'll see what this new week opening gap wants to do. If we want to start breaking below them or above them. Right now we are below the weekly open and the 30-second opening range, so they're in agreement. But given the fact that, again, I'm higher time frame bullish, I am not going to just jump into shorts by any measure until price actually really showcases to me that it wants to go lower. And I'm very mindful that any shorts that I do take are going to be short-lived, and I'll be content with, you know, having any kind of price go way further on the short side without me. I'm already prepared for that. I don't like calling tops in markets. That's never been fruitful for me, and some people are good at it. It's just not something that I've found successful with in my own trading in the years that I've been trading. So we'll go over the stat map briefly. We just fell short of this manipulation on the day, and we've also traded through the bullish manipulation on both sides. So for me, again, to really feel confident in price going lower, we really have to start breaking below the 780s. And to feel more confident on the upside, I really want to just invert any kind of this like dump right here. That was like a flash dump at like 6 o'clock. So I have my triggers and my conditions, and now it's just about being patient for price. Do have an opportunity to answer any questions, so just keep me posted if you guys do have anything. There's no real news that I see on the day, so there's something to be mindful of as well. Appreciate all 20 of you guys that are in here, so let me know if you guys have any questions. Happy to help. For those that may want to ask but are too shy to type up, but this right here is the fractal model, and you can see that it's the 5-minute, 1 hour. So these are just hourly candles right now that I'm watching as well. There is a pretty clear imbalance that's created on all of them on that hourly chart, and I am watching that. The Russell right here may want to start flipping its opening range, which I actually wanted to see. So this is something that I'm paying attention to see as well as there's any price action above the 28.18s. So if this is a proper change state delivery, we should basically start accelerating here. If not, they're just going to chop around a little bit. See how price action is not terribly exciting on the NASDAQ. Once again, it's because we're just consolidating within this new week opening gap. So when we're consolidating inside a new week opening gap, just be very, very cautious and patient. And I will mark out this as well. So the close and the open. We're also having some trouble right here on the open. That looks like it's trading the most free. Definitely a lot of patience today. Dow just swept out its hourly low. Noticing that same hourly low around here. So let's see if the Dow wants to snap back up or if it wants to continue. Just waiting. You guys see anything interesting, definitely let me know in the chat. Yeah, of course. Raymond, appreciate you. I personally like to keep it on neutral for the bias. That's just my personal experience. See how NASDAQ's just really consolidated. It's like really, really important to watch. It's like jot down in your notes like when are you gonna see like opening consolidations. So if we start opening within a new week opening gap, something you want to be able to be very mindful of. I'm still looking at this low right here, which is that 7 o'clock low. NASDAQ and ES and Russell all failing to take that low when Dow is trading basically below that low. S&T by itself doesn't mean anything. I don't see an imbalance created away from that liquidity pool to actually trust the S&T. Do you give much weight to the 4-hour rejection wick since that's formed since 6 o'clock? So I was looking at that on the 15-minute and the hourly for the imbalance, and you can see that this wick on the 15-minute and hourly stayed above that midpoint of this imbalance on the 1 hour and the 15-minute. So since those bodies are basically still respecting that, that's kind of the influence that I like placed on it. I don't really have anything else much to say other than that. Hopefully that answers your question, Aussie. Yeah, if you guys have any questions, drop them in the chat. Happy to answer them. Well, NQ to me is just going to consolidate until it leaves this new week opening gap. So that's just basically the premise that when we open up inside of a new week opening gap and also test the discount end and the premium end, we're just basically finding value inside of this new week opening gap. So I look at more as a consolidated environment until we start, again, inverting some of this bearish imbalance. But definitely like weaker volume across the board, like not really any clear magnitude moves. Even though that there was even some kind of move right here on the Dow. It's basically just rating liquidity, and there's not really any kind of acceleration as of right now from what I'm seeing. That could obviously change, but from initial movements, nothing too exciting. Not that price has to be exciting, but want to see magnitude and direction at 9:30 for clean low resistance moves to occur. So Nasdaq's attempting to try to get over the 30-second opening range. We'll take a look at that. Let's see if that's any kind of degree of intent. The Russell's kind of snapping right now. So just rated out this initial 9 o'clock low, and I want to see if it starts to accelerate. Whenever you have a noticeable wick, like pre-market, like this right here, and this, just be mindful that like a lot of people are just going to be looking to place their stops once they see those large wicks there. And again, given the nature of 930 being opening volatility is going to really look to neutralize liquidity and pair up new orders, right? So when you see that type of like price signature, just be mindful that again, there's a lot of interest to see how we react at large wicks that are placed before the open. I always get this question too, like people are asking me like what accounts I like and what I'm trading right now. Lucid has some really good offers right now. I'm personally liking the flex accounts. Recently just took a payout on 2 of my accounts last week. It was a pretty good solid April for me, so I was happy with that. If you want to see my performance, then you can go ahead and check out the Discord. I posted it in our channels. And Lucid, like their payment processing is absolutely lightning fast. Yet to see another prop firm be of that same speed. Submitted the payout in within literally 3 minutes. You already see it processing within your bank account. Very good. So look, we're still testing that weekly open and the top end of that week opening gap. So let's see. Nasdaq wants to be friendly. Should start accelerating pretty soon. Also have that 950 macro coming up, so something to watch. So let me know what you guys are trading on the prop side of things in the comments or in the chat. Seems like Lucid is a large proponent, Tradeify as well, Apex as well. If you guys haven't already, also like the stream if you've enjoyed any analysis or commentary so far. And if you have constructive criticism or things that you also want to see that I maybe haven't done, then let me know. I'm always interested in feedback. Lucid Flex, yeah, really solid account. Raymond, nice. Did you do the end of day or did you do the trailing drawdown? I'm going to be trying some end of day accounts pretty soon. I've just been focusing on Lucid as of right now. So ES right now looks like it's going to want to run this liquidity a little bit further in my eyes. I do like the fact that we are maintaining this initial low right here at 7 o'clock low. I do like this SMT from here and then here. But I want to see newly created imbalances away. Flex all the way. Yeah, Flex account is super solid. Very trader friendly. All right, so let's see some speed on the Russell right here. That'd be nice. So Russell now above that's 930 initial high. If it's going to continue, it should really start to have some legs to rate out London and Asia. I really do like this hourly SMT right now. And hopefully you guys can see again, like ES, I'm not too confident in the draw, right? And then NASDAQ, I explained why it would be consolidated, right? And look at the difference that you're seeing now on the Russell. Like this is the, I don't want to call it just like experience, but it's just like really understanding the liquidity engineering pre-open and understanding which liquidity pools are relative equal highs as well as the overall narrative. Like that's what you get here. Like I'm sure that most people, if you were to like do a poll, right, which one looks like it has the quote-unquote cleanest price action to the upside, maintaining a bullish bias? Right now it's Russell. You can clearly see that. So when people ask me, why do you have 4 charts looking at it at the open, this is pretty much my answer, right? I want to be able to see which specific assets are going to be the most beneficial to me to look to either long or short. And I obviously want to be selling short the weakest asset, which the weakest asset today was the Dow. And I want to go long and maintain my higher time frame bias, preferably on the strongest asset. And right now, the strongest magnitude asset right now is the Russell. So hopefully that's beneficial to you guys. My top confluences before entering a trade. I'd say number 1 is liquidity. Before I even enter a trade, and you guys see this all the time in my analysis, like I need to know where I'm going to be exiting a trade. Meaning every single time I plan a trade, I'm always looking for the engineering of the liquidity. Because if you don't have the engineering of the liquidity, then you don't really know where you're going to feel comfortable either exiting the trade or targeting. And that's like really, really, really important. Arguably, probably the most important thing to me. So again, we're just approaching this London high right here. So 24. But we started out the analysis, and I'll just hide my drawings real quick. There's a lot of interest right here at the London high, Asia high, weekly open, right? Especially maintaining that higher time frame bullish bias. So first thing I look for, and when you're saying about confluences, is the liquidity pools. Liquidity pools to me are very, very, very important, and it's the first thing I really pay attention to in my analysis. The second thing I really like is understanding which side of order flow am I really entering on, right? So if I'm bullish or bearish, basically on a higher time frame, that's really, really important. It's a confluence. Third, I like SMT. I like looking at it a lot. It's not the basis of my trade, again, because I've already mentioned the first 2 confluences being the most important, is really how liquidity is engineered, as well as the higher time frame bias. So that's what also pushes price in an easier manner versus looking at price in a more difficult light. So there's that London high. It's the first TP, a little partial there. The second, again, we were looking at liquidity engineering, higher time frame bias. I like looking at SMT, and then change state delivery as it looks like on the fractal model is always very beneficial. I just want to make sure that I'm on the side of the most recent order flow shift. So that's like coupling that higher time frame bias with that lower time frame executions. So that's really, really important to me. And then that weekly open, 30-second opening range, that's literally my baby. I found a great deal of happiness to basically just be content with looking at when they're both in agreement and I'm trading within the weekly candle. So this is that daily candle today on Monday, but reasons why I do like trading on Monday is that the daily candle and the weekly candle are the same. So I'm basically looking at that weekly range expansion right now. So HI is about to get hit. You guys, let me know in the chat though, like, do you guys see like the difference between Russell right now and weaker YM? And look at this consolidated NASDAQ mess. Same thing with ES. Like, hopefully you guys can see the difference and understand that over time that the liquidity engineering pre-open is very, very important, as well as where we're going to be opening up. And I've already mentioned to you before the day even started that if we're opening in that new week opening gap on NASDAQ, until we leave that, I'm not interested in touching it. And look, all we've done is consolidate. So I don't have like a specific name for a model like most people do. Again, I've kind of just listed out my confluences in terms of a checklist, and that's the best thing that I can kind of like illustrate. So I look for liquidity engineering first. That's why I place a great deal of emphasis on looking at session liquidity. Session liquidity is arguably one of the best things that any trader can look at, because you're looking at very static time-based liquidity pools that over time you will start to find a relationship and how specific correlated assets interact with those time-based liquidity pools. And when you're able to look at that from a very objective standpoint to say, okay, well, I'm going to always be looking at the liquidity pools at the same time, and it makes your analysis a lot more mechanical, and you take a lot of the subjectivity away from that. So I don't have an actual quote-unquote name for my model, but it's the first thing that, as I said in the whole checklist, is that I look at liquidity engineering, and I want to know where can I basically attack liquidity, where can I neutralize liquidity, where can I pair up orders, and that's how I view the market. So we're very, very close to that Asia high. At this point, we shouldn't be going below the 950 candle. That's that kind of like macro open, so I would really want to see that maintain in the market. We do have that. If we do have a full retrace here, then that's just part of it. But I still see that Asia high very likely to be tagged out. Adventure time. Let me know if that answered your question though. But I know that in the sphere of the industry, there's a lot of people that say like, oh, this is my model. This is what I call it. I don't have a name for it. Maybe one day I will, but yeah, that's just keeping it real. Yeah, liquidity engineering, like I said, guys, that's really all. It's like the number one thing you want to see in your trading is where can I attack the liquidity. I like trading to liquidity as well. If I have the option, like versus like, let's say that give me like a pop quiz and you say like, Josh, are you interested in trading away from liquidity pools or to liquidity pools? I'll always like to trade to liquidity pools more than trading away from them. Meaning I like attacking liquidity versus reverting away from them. Because when you're reverting away from liquidity, if you think about it also like very objectively in this, when you're reverting away from liquidity, typically like going back to 50% of a specific dealing range or going back to even more of like a premium or a discount away from that, that's typically the move that materializes when you revert away from liquidity. But if you target liquidity and you want liquidity to be ran, you actually have a better expected move that if you are right, you're going to be more right. Meaning when you rate a liquidity pool, you don't necessarily know how far it's going to move away from it. But versus if you go and you attack a liquidity pool, like for all I know, I can literally go and take Asia out and then start running way past that. When you're reverting liquidity, let's say you were wanting to take Asia and then look for a move back into the range, you only have a pretty like defined range before you're going to expect at least another retracement. And that's like a big thing of people have not necessarily thought about, and I can kind of just illustrate that further. I think it's a really, really important point. Like, look, this is what I'm talking about. So imagine you have, imagine you have a liquidity pool here. So what I mean by reverting is that, let's say there's a line here and then you're going like this and you're reverting, then basically this range is what like that target's going to be. So like from the liquidity pool that was rated here until here, and maybe I should just do the brush so it'll be a little bit easier for people to see. So like imagine this is your liquidity pool and price is going to trade to them, right? This is reverting. So let's say that liquidity is now taken. When price starts to come back up, and let's say we create a new imbalance away from it, then this range of price right here, and specifically like the 50% of it, like that's basically like a first target, right? And you don't know what's going to necessarily happen after this occurs, right? Price could obviously retrace and then start expanding again. It could also reverse from there and go lower. And it can also just kind of consolidate here. So that's like example 1 versus example 2 is, let's say you have a liquidity here, and let's say you're higher time frame bearish in this example. If you're targeting like a short opportunity here and you want to see this, liquidity here because you know that there's stacked liquidity, like let's call it 2 relative equal lows, then this move can go much further below this liquidity once they start running it, right? So I just saying it for what it is, if you're targeting liquidity pools, typically you're going to have a larger expected move if you are correct in your analysis, versus if you are reverting away from a liquidity pool, this range is really kind of like, I don't want to call it like a guaranteed range, but like this is your expected range versus an expected range being here. So they're not drawn to scale, but hopefully this example helps you guys out to understand the difference between reverting away from liquidity and also targeting liquidity. Let me know in the comments if that's helped out though. Pretty important. Or in the chat. I always say comments, but it's also chat. Maybe if anyone wants to provide feedback, that'd be helpful, but if not, and you guys are trading, I understand. I'm pretty close to that Asia high again. Still looking for that to be ran out. It's not necessarily about lower probability. I mentioned that I'm higher time frame bullish, right? So if there's a weaker asset that's just going lower at the open, and I'm higher time frame bullish, I just don't really want to engage in that, right? Because if I'm higher time frame bullish and it's already showing me that it's weaker, then it's just not something I'm interested in. I wouldn't say that it's lowest probability though. I would just say that it's not the most favorable move. Does that make sense, Ozzy? Appreciate everyone that's liked the stream as well. Shout out to you guys. I actually started the stream with no water nearby me, so I'm getting a little parched. My voice is getting a little raspy. Let me know if you guys have any other questions though. Some good interactions today. I really do appreciate everybody that's wrote something in chat. When I do these live streams, it's always like I'm talking to a lot of people that I may have not seen face to face in my life. So part of interactions and conversations is kind of having like two-way response. And if there's not two-way response, then it's a little bit more challenging for me to flow a conversation if I don't necessarily know what the response is with you guys. So I just kind of say a bunch of things. But that reverting away and running to liquidity pool, very big idea that if people have not thought about before, it's pretty important. The one thing I can only hope that if someone's a NASDAQ trader today, I've tried to save them as best I could to know that this new week opening gap and how we opened up is fairly consolidated. And I'm sure a lot of people already got chopped up here if they weren't either on our stream or not aware of this idea and concept of opening within a new week opening gap. Yeah, I appreciate it. When you guys provide any kind of comments or like the stream, that means a lot to me. I really do enjoy live streaming, and I do anticipate that later on it'll be a little bit more than just Monday and Wednesday, but as of right now, that's kind of been the schedule. Oh, it has go slow messages? Interesting. Let me see how I can fix that then. Well, you should have let me know that earlier. Let me see how I can fix that. Oh, shit, I'm sorry about that. Well, I just turned it off, so if you refresh, sorry, someone should have told me about that earlier. I'm sorry. Slow mode should be off now, though. They're really priming this Asia high. It's interesting. Would have anticipated them to run that already pretty soon. If they haven't. Ozzy, if you refresh, the slow mode should be off. All right, cool. Thanks for letting me know that. I appreciate that. I'm going to be more cognizant of that in future streams. There's some news that's hitting the wire right now of explosion fire reported on a South Korean vessel in Hormuz. So I wonder if the markets also want to kind of just consolidate and wait for like some sort of headline. That'd be interesting. I don't know if someone can also let me know if they know if this 6 o'clock was any headline driven or it's just natural price action. So it just tapped into that imbalance on the Russell very, very shallowly. I do like this. It's really got to kind of just go on this candle. It's a nice market maker buy model. Awesome. Ozzy, if you have anything that you want to like hear from me or anything that would inspire any future content, then also just kind of keep me posted. I'm very open to any feedback, constructive, or points that may need clarity. I'm always happy to improve. It's just dancing right next to Asia. Yeah, just keep me posted. And it's not just Aussie. Anybody that's in the live stream too is the same thing. So Nasdaq's creeping at that weekly open again. Asia high coming up on Russell. 28. I like that number. All right, there we go. Come on. Come on. All right, there we go. It's ram. So this is what I mean now when we were talking about reverting versus targeting liquidities. So given the fact that, again, that I took long positions around here, I want to see how we interact with that liquidity. And when we say interact, like, are we stretching past it, or are we just hitting the liquidity and kind of retracing? So that's something that I'm always watching. Whenever I see liquidity pools, especially session liquidity pools, get ran, I want to see follow through. I want to see magnitude after we run it. And that'll just tell me that price is seeking more orders that's stacked above or at the level. And then at that point, it's for some of the OGs that have been inside of our Discord, but the moment that, again, we run liquidity, right? The candle that runs the liquidity right here, this 12-12 candle, I'm on a 3-minute, I can also go to a 5-minute chart, doesn't matter. It just depends. It's like ideally the candle that runs the liquidity, I don't want to see that candle low get taken out if we're going to continue. If we're going to continue or consolidate, then typically this candle's low is going to be maintained, right? If it's going to consolidate, then that means that, and I got some crypto alerts, just be mindful that that might start popping off if we have volatility across the board. But anyways, the candle low, if you're bullish and you're targeting liquidity, ideally this candle's low should be maintained for further continuation, right? If we're going to retrace off of this level or consolidate, then typically you get something like this. See what I mean? So the candle low when you're bullish and targeting liquidity is really, really important. And you can ask me like what time frame, like that's just going to depend on the aggressiveness, right? So look, this is the candle right here. Once the liquidity loads right here. So this is the candle that ran on a 1-minute chart. I think this is pretty aggressive to say, but obviously, again, if we are really bullish, then those conditions you'll really see through your own back testing that the candle that runs the liquidity, that low, is really, really important for trailing stops. So if we are going to continue, again, I want to see the candles that run the liquidity be maintained on their lows. So I kind of just like shuffle through the candles and the lows, and you can see that this 5-minute, I really like that. Obviously, the higher time frame that you go, the larger distance that you'll potentially give up on your trailing stops, but that is a give and take for your risk tolerance. Let's see if, but like, yeah, look at the price action here on the Russell comparative to these two, and then also on the Dow. So I'm very content with the asset that I picked and I traded today. Again, not every single time it's like that, but that's kind of how I view my job in the market, is that I want to be able to select the asset that's going to be cleanest and most aligned with my higher time frame analysis. So StatVol is a very important tool for when you're looking at new assets that you're potentially trading. So what I mean by that is that the stat volatility on a bar graph, and let me just pull it up, stat. Yeah, that is an absolute gem, Aussie, truthfully. But like, look. So this right here could be confusing to some people, but I'll just break it down. What the stat volatility does is it kind of showcases to you on a heat map basis of like where anticipated volatility is going to take place. So on Russell right now is what we're selected on. You can see there's a little bit of different shading here. Let me just use the demonstration for this to be easier. You can see the shading difference here, right? These are just periods of time where you're going to see that there's going to be a little bit more heightened volatility across the sample size. So right now I believe this is set to 60. Yep. So it's like the last 60 sessions are being characterized inside of this sample size. So you can see from basically 930, that's that opening volatility, and that 950 is basically when it has that last like teeter off, and then it gets a little bit less volatile. And same thing here. Here's the open, and then here's around that 350 market on close, right? So you'll see, like, let's say I go to gold, right? This is going to change. And once it loads up, see, gold has a different volatility factor. Like, gold is a little bit more volatile in that Asian session than it is of index futures markets, right? And you can see also here at 930, there's an opening volatility. And then there's also some volatility here at 820 to 830. And that's that 30-second opening range for gold. So when you're utilizing, like when you're trading new assets, right, definitely want to take a look at the stat volatility and note where specific volatility injections are likely to occur through data aggregation. And that'll help you with your analysis. So let's go back to price. So again, that run. So this would be my next objective right here. And that would be running out the current high day, which will be 228.40. We are on Discord. You can join our Discord. The link to the Discord should be in the description, but I don't think it is right now. But I will add it. There you go. That's the link to the Discord. You basically join our Discord through WAP, and you just claim your role. We do that for security purposes because we don't want scammers just entering our Discord and just spamming randomly. So that's why it's set up like that, if you're wondering. In that run, which I like to see. This is a really nice run right here on Russell. Really like that fair value gap. I like how this candle that took the liquidity is being maintained. and we're just still creating new highs. So just following order flow on the 5-minute chart. And we're just shy of the high of the day right here. Do anticipate that other assets are going to start to pick up, and you can see that here on ES starting to pick up a little bit. Got London highs in the crosshairs on ES. NASDAQ still being a little bit squirrely, and you can really see that SMT now from that 7 o'clock low. Look at that SMT right here. SMT, SMT. And there was that imbalance after that SMT. Awesome, Ozzy. Really happy to hear that. Means a lot to me. I'm just holding runners now on the Russell. Dow is also starting to trade above its 30-cent opening range, so I mean it's good. This could be pretty good. Just have to see how we interact with the current high day, which we're knocking on the door with right now. Yeah, you want to see that candle that ran the liquidity hold. That's a really big gem. One thing I'll mention about that is that if you just, let me kind of go back to my drawings over here. So imagine you have this liquidity pool and you're trading up to it, right? So like when I was first trading ICT, a lot of times where let's say I just had relative equal highs and there was another one here, right? I would just like full TP, like right here, right? And there's nothing wrong with that because you're still realizing objectives, but there'd be instances where, again, you have relative equal highs and then price just goes like off the charts. And then I would kick myself and I'd be like dang, like I could have either held a runner or I could have done something about that. And in kind of like reverse engineering some of the stuff that I saw from ICT, and there's basically price action model 4 if you're not familiar. It's a position trading, swing trading model based off a seasonal tendency, and he actually enters the market from a stop order in that model, and the stop order is actually that candle that swept the liquidity. So I was like, okay, well, if that's the case, and you kind of just look at that in reverse, then the times that you basically see a larger run and that model fails to deliver is because it doesn't trade below the candle that took liquidity, and then it's just going to keep going. So if you guys want to know the origins of why I'm looking at that, that's where it's from. So hopefully that's insightful. And I can put the link in the chat. And that's that video from ICT. Shout out to him. And there's like a couple of lessons from there. So don't just look at that one video. Just look at the whole price action model 4 and you'll see what I mean. Live streaming schedule on YouTube is, as of right now, it's Monday and Wednesday. Those are the 2 days that I am scheduled for on YouTube Live. Occasionally I'll go into the Discord and I'll just hop on a random live stream. And that'll be fun. If you are in the Discord, you'll be able to see that. And yeah, we transitioned a lot of our live streaming from Discord to YouTube. YouTube is just far easier for a lot of people and just want to make live streams publicly available. We never charge for live streams at all. That's not what we did. But if you want the tools that I'm trading with, that's part of the Toodegrees Elite collection. And these layouts are also inside of our Discord. So if you ever wanted to see your charts just like mine, you can go ahead and see them. I think I'm gonna end the stream right around the 10:30 mark. I just do want to see this current high day get ran out on stream for the Russell, but obviously managing the position, something I can do off stream. But again, the Russell, I was never short bias on the Russell. It's very important that you guys are aware of that. I was never short bias on the NASDAQ. And I also mentioned that ES wanted to look to run this liquidity a little bit more, and it ended up holding that 30-second opening range. So it kind of has that London high now, and that weekly open that's going to be a magnet right now. So I'm content with my analysis. The only thing I would say that I got quote unquote wrong was looking at predicting the opening volatility on the Dow, and Dow ended up being the weakest, but mentioned that SMT. And after that SMT, we had a very clear imbalance here, and I used that to run out liquidity. Yeah, no problem, Aussie. I really do like live streaming a lot. It helps me stay more accountable also when you kind of just like vocalize your thoughts. If you haven't tried to already, just record a session of your own trading. And if you are looking to, like, let's say, explain what you're doing either to yourself or share that also with others, you'll quickly see that you start to do a lot less dumb actions. And what I mean by dumb is just not following your plan or not following your true intentions, or not believing in yourself. And those things are like, once you get over that that speed bump, it's a lot easier to digest your own trading and also understand like what's actually working, what's not. So if you've never recorded a live session of yourself trading, doesn't have to be posted anywhere, but just be mindful that's a really, really powerful learning experience. Appreciate it, Raymond. Did you take any trades, Raymond, or Aussie, or anyone else that's in the chat? It's either asked some questions or was interacting. I was just curious. And don't feel ashamed of yourself, and also don't lie to yourself. It's not good whatsoever. Just be open and honest if you do decide to respond. Think, G, were you trading NQ? You mentioned 2 trades. Yeah, I mean, I don't want to say that for what it is, but in a choppy environment, that break even is going to definitely look to occur. So just be mindful of when that occurs. And, you know, if you manage your risk and you are accepting of the break even, then that's great. But in a choppy condition, break even is going to happen more frequently. But you guys see, like, you're saying that NASDAQ was a little bit more challenging. Like, that's the power of looking at a correlated analysis, right? Like, look how much nicer of a run this is if you're a higher time frame bullish. Don't need to just marry one asset. You'll see. Good. All right. I do want to end the stream pretty soon, but I do want to see this current high day get ran out. They took this 10.05 long. That's a nice trade, man. Right on, right on. Okay, let's see. I mean, once we invert this, it should start to just run. Change this color before I get confused. Come on, Russell. If we drop back below the weekly open by 10:45, I'm gonna probably end the stream before the new high day. Okay. Getting towards that fill of the imbalance. Just want to see it run. Come on. For everyone in chat, what's your guys' thoughts on like music for live streams? Like, 'cause I know that there's always like a dead pause time where if like I'm not talking and it's like a little bit of just like silence. But I have to like figure out the whole like royalty free and copyright stuff for music because I want these streams to be available. And if they give you like a copyright strike on YouTube, then they have to like turn it down or take off the video. So yeah, I guess the music is a little bit more quote unquote entertaining. I'm not looking to be a entertainer. I really want to just focus on price and be a little bit more serious than other live streamers. I think that that's the angle that I look to take. Some people want to be entertained, and that's understandable, but I think trading is very serious and should not be treated like a game. We're not even a point away from the high, so I am fully expecting and anticipating this high to get ran out, but if it doesn't, then it's just part of it. But here's what I mean about also the channel that takes liquidity. Like on a 1 minute chart, you can see right here that it just basically wicks this, right? So when you are studying that that type of theory, strategy, whatever you want to call it, cycle through your time frames and see what like makes sense to you. Like all of these, like the 1, 2, and 3 minute all got ran out, as well as the 4 minute, but I mentioned that the 5 minute right here was something that made more sense. That was that pivot inside of the imbalance as well. So just be mindful. But if you are trailing out, let's call it here, and that's 28.25, and the liquidity pool is 28.28. You're really only giving up 3 points for a potential expansion. So if you were to look over here at 28.28, and then here is 28.32, it's basically like a 1-to-1 that you had a 3-point move up versus 3-point move down or a 2-point move down. Yeah. So just something to be mindful of. They are really dancing at this high. Awesome, Aussie. Yeah, Nasdaq's really a mess today. That is very messy. All right, come on. Come on, Russell. And you can do it. We inverted. No, we didn't, because we had this in volume balance. If you guys see why also I'm adjusting some of my imbalances, like if it includes a volume balance, ICT likes to couple them together. So that's something just to be mindful of when you're drawing your imbalances. I sometimes forget about it too. and I don't care about this SMT right now until there's a newly created imbalance away from it. So like I've already stated, that SMT by itself does not shed a lot of, let's call it, weight to me. I only like seeing SMT after newly created imbalances are formed away from that SMT. So this is just showcasing to me that YM is a little bit stronger as of right now, as it relates to the previous 15-minute high. Total side note, could be a little bit random, but I purchased this mango snack at Whole Foods. It's pretty good. And I want one of those right now. Just kind of craving a mango snack. But there we go. So we ran that initial high day. If there's going to be expansion or, you know, sort of any kind of run through this liquidity, then it should start to pick up legs. If it doesn't, then that's just part of the game, or the analysis. 4 standard here at 28.35 if they want to reach up into that, but I do want to see this manipulation at 40 get ran out. At this point, obviously risk free on trades I took over here. But yeah, I'm pretty satisfied. Hopefully you guys learned something today, found the streams insightful. Hopefully you didn't hurt yourself, and now you just, again, if you were missing any of the trades today, then go back and review what you see as a potential setup and log and journal it, and from that point you only look to improve. So that's what I got for you guys. Yeah, I'm satisfied. Awesome. All right, well, I'm glad that you guys also enjoyed it. I'm gonna get some water. I hear my voice already getting a little raspy. If you didn't hit the like button already, I'd appreciate it if you can hit that. And if you also want to support our stream, then you can use 2 at checkout. Discount code 2 at checkout at Tradeify, Lucid, Apex, and TradeZella. So, all right, you guys take it easy. Have a good one. Much love.